Good morning. Welcome back to Market Day Report. I'm Chris Swift, sitting in for Marlon Bowling. We've got a exciting morning this morning and got grain prices just a little bit lower. So let's get started and see what we have been able to do so far with the corn market. I've got the July corn market down 9 3/4, 591 1/4. We've got December down 6 3/4, 536 3/4. Doesn't seem to have much of a strength to it today, even in the midday rally. Soybeans down 3/4. That's where the rally is coming in. We're a good dime off the lows now in the July. 14.14 down 3/4. September down 2 3/4 at 12.84 1/2, with November down 1 1/4, 12.65 1/2. Chicago wheat still lower, down 6 1/4, 6.35 3/4, with a low of 6.26, so about 9 off that low there. December down 8 3/4, 6.63 even. And finishing with Kansas City hard red winter, down 7 on the July at 7.76 1/4, with the December contract down 9, 7.75 with the last one. Minneapolis spring wheat, down 16, 7.97 even on the July contract. December down 15 3/4, 8.06 1/4. I would like to bring in my guest, Robin Cross, this morning. Robin, I certainly do appreciate you coming in. Robin is with StoneX, and I hear we're going to talk a little bit about lumber this morning. So with our housing starts down and we've not had a real good, robust market with our interest rates, tell me what lumber's going to do.
Good morning, Chris. It's a pleasure to meet you, good buddy. Let's get right into it. So this morning, let's go do prices first. So May legacy contract, big board, 352.80. That's up 380. 17 trades over there. So a little quieter start than we've seen the past couple weeks.
Okay.
Mini May, that's going to be your new lead contract, comes at 461, down $5. 62 trades over there. July, the lead by open interest is currently trading at 505, down 250 with 99 trades. Well, Chris, since it's our first time together, I'll give you the word of the day. The word of today is convergence. If you look back at the last 3 expirations and beyond, each contract expired near or at convergence to the underlying cash price. And that's very typical in a normal, tangible commodity market. This truly means the market is functioning, as it should. Well, in lumber, due to the depressed pricing well below the cost of production after expiration, the new month has a tendency to start with a big premium and eventually work to an even higher premium because traders are instinctually bullish at the onset of a contract. And that's for a few reasons, mainly from prices trading below the cost of production, as I said, and clearly undersupplied housing market. Therefore, a lot of bullish sentiment, which in turn leads to a lack of offers. Therefore, we rally. Then as time goes on and the reality of the economy sets in, particularly due to what you said, high interest rates, and the positivity fades to reality, the market loses its premium and breaks down to the underlying cash price and convergence. So that is exactly what you're seeing in the market now. Combine that with the legacy contract expiring because no trader wants to be the last one in the market with really no exit on the spread or otherwise, making the convergence process, this usually doesn't happen till right before expiration, just that much faster. So April 17th, we put in a high of 439.80, which at the time, I guess it was about around a $90 premium. We've been down every single day since today, making a new low of 347, and that's a loss of about $92. And now the market is fully converged. The underlying cash price yesterday was just released at 355, so I consider this a full convergence. But now this is a move that would take, like I said, a couple weeks to make. But now that the move's been made, I definitely think that traders should wait for an opportunity. You're kind of in no man's land here. You're totally on the lows of the market. It's been sitting here, so there's not a lot of meat on the bone for hedgers to hedge. And at the same time, it's not cheap enough for forward sellers and buyers to buy. So I think at this time, guys should be patient. And if you look for the last 6 months, I'll give you one little factoid. January lumber went off at 344. March went off at 347.50. Now May is trading at what did I give you this morning? 347. So if you look at the last 6 months, if you literally just bought it and went away, you didn't get hurt. You didn't make or lose money this entire time. So I do believe it's going to break loose as we get into summer, but I think that we have to get through the expiring of a contract that we traded literally, I think it was like 49 years. Guys got to get used to the new one before we start, really cooking in the market. So that's about it for today, good buddy.
All right.
Other than that, nothing. So it was very nice meeting you, and thank you for having me.
Oh, Robin, always do appreciate that, sir, and appreciate you coming on and doing it. We're going to take a short recess here and come back in just a minute and finish with the livestock.